It was boxing in the 1950s. You wait for the other guy, Carmen Basilio or something like that, to get a cut over their eye, and then you keep punching the cut over their eye over and over and over again. That's what they did to Bloomberg.
Warning. The political trade features probabilities and perspectives about politicians, political parties, political outcomes, and political wagering. The political trade is rated NSFP, not safe for partisans.
The number one biggest game is when they gain number fame. It's like a race at the top because they want to be boss. They don't care who they step on as long as they get along. Politicians in my eyes.
Welcome back to The Political Trade, the podcast for people with a passion for politics, probability, and profits. I'm Jeff Joseph, the editorial director of Luckbox magazine, hosting the podcast where conservatives and liberals, Republicans and Democrats, partisans and wingnuts all come together to make money betting on politics. That's trading in the prediction markets at predicted.org, the stock market for politics that trades 24/7. Returning to the show today is Supertrader Scott Supak. Later on, Scott's going to reveal some tactics that he uses to achieve his consistent leaderboard-topping returns and share his current best trades. So, as always, to get the most out of this podcast, you should open up predicted.org, click on the Markets tab, which is top left, follow along, and leave your ideologies at the door. Mike is our producer, editor at Luckbox magazine, and a prediction market trader. As always, at my side here, Mike, what's on your mind?
Well, Jeff, I'm sure what's on everyone's mind right now is last night's debate. I know that the Nevada caucus is on Saturday, but what's on my mind is that we said in episode 1 we'd have a resolution for Iowa by the second episode. We're on the third, and we still don't. What's going on in Iowa?
What's going on in Iowa? That's going to be a big question we have as well for Scott once we have him joining us. In fact, Scott, why don't you come on the line? Are you with us today?
I'm here.
Well, Scott, welcome back. We led off with a Chris Matthews clip. Chris conjured up old-time memories of Carmen Basilio, the former middleweight boxer that defeated Sugar Ray Robinson to take the title. He was best known for his consistent body blows to the face, to the body, just kept on punching away at him. That's what Chris was recalling. Is that what you saw last night?
Yeah, absolutely. He would find a weak spot and keep hitting it. And that's exactly what happened to Bloomberg last night.
It seemed to be a big hit with viewers. Nielsen has already come in with at least 10 million viewers, which it's nice to know that the debate beat out The Masked Singer, which had 7 million viewers earlier this week. So political engagement is back on a high.
We used to have ratings markets. I don't know. I haven't seen those in a long time.
Yeah, it's been a while. But the ratings were high for the debate, and that's what everyone seems to be pretty pleased about. And the polls are out. We were scouring some of the post-debate polls. There were 3 that showed up that had at least a meaningful amount of respondents to make the data statistically relevant. The Washington Examiner said that Bernie Sanders won 38%. Elizabeth Warren came in second with 20%, and Michael Bloomberg came in third with 11%. I'm not sure who voted for Bloomberg, but he got 11% in that poll. We'll move on to the NewJersey.com poll. Bernie Sanders came in first with 32%, just probably narrowly beating out Axe body spray, I would think, for New Jersey. but Pete Buttigieg came in with 19%, Elizabeth Warren at 17%. And then Drudge, which had the largest response of over 200,000 respondents, had Sanders winning at 27%, Klobuchar at 19%, and Warren at 16%, and had Biden all the way at the bottom at 9%. So the consensus was Bernie Sanders, big winner last night. How do you see it?
Big grain of salt with those polls. I'd like to wait and see some quality stuff come out. But I think anybody that watched that last night knows the big loser was Bloomberg. He did get some counterpunching in, which might explain the 11% you had in that first one. But no, it wasn't pretty.
It wasn't pretty. Let's listen to some of it.
I'd like to talk about who we're running against. A billionaire who calls women fat broads and horse-faced lesbians.
You talking to me?
And no, I'm not talking about Donald Trump.
Then who the hell else are you talking? Talking to me?
I'm talking about Mayor Bloomberg. Democrats take a huge risk if we just substitute one arrogant billionaire for another.
Yeah, Warren came out swinging yesterday.
Where has she been?
How about it? Yeah, she did take a break and came back. watching the debate in real time and listening to, watching the markets respond, there was a consensus immediately that Warren was having a great night and that she was essentially the winner from a debate standpoint. But I'd like to propose a contrarian view. My take is that she lost an opportunity because, yes, she dominated Bloomberg and really made him look foolish right out of the gate. But her lane is Bernie Sanders, and that's really the candidate she needs to take out. There's plenty of time to go after Bloomberg. And at this point, I would think that she really needed to be showing a difference to progressive voters as to why she would be preferred over Bernie. And I think it was a lost opportunity for her.
I agree. One of my friends, Andrew Bond, this morning was saying the exact same thing, that nobody attacked Bernie, and he's the one in the lead. Now, she might have been doing something smart, though, just to take the contrarian view. She said some things that make her look like a fighter. So if she realizes that she's not going to be able to pass Bernie, maybe she's running for vice president.
Well, we know that, of course, our president had to weigh in via Twitter, right? Called this perhaps the worst in the history of debates, referring to Bloomberg's his performance. And of course, it wasn't pretty, was it?
No, it was not. I think Donald was a little worried about Mike there for a few minutes.
Well, I have this great resource in having you, the Supertrader, on the line with us. And I have to share a trade that I made that I was so optimistic of going in, and you can do a postmortem with me and tell me what I did wrong. In fact, I had talked this up. It was apparent that this being Bloomberg's first debate, that he was going to be under attack. I think we all knew that. So my investment thesis was, well, if he's going to be under attack most, the way the debate guidelines work, that means you have an opportunity to respond to those attacks. So in the speaking time market, and I love these prop bets, right? I look at this just like a Super Bowl prop bet. And there was a speaking time market. My theory was he's going to be under attack by all the candidates, which he was. I was right about the theory, but wrong about the result, that he would dominate speaking time. It's like a time of possession in football, right? That's the bet. And it just didn't play out that way. I had him for rare guess shares. Fortunately, taking your advice all the way back from episode 1, I had hedged that by buying no's on everybody else. So it wasn't an outright loss, but he actually came in last in time of possession in speaking time.
I hate those markets. I know a lot of people love them, but it's way too much like gambling to me. It's bad enough that I got to worry if a good poll is going to come out like Gallup 49 again this morning. That's enough for me to worry about. I can't take these, roll of the dice type bets, but you did the right thing. You hedged. I would say the other thing on markets like that would be if you can get them cheap enough, if you got the Bloomberg yeses cheap enough, sell a few of them. Follow that iSavage rule. Buy twice as many as you planned on buying and sell half of them right away for a little bit of profit. It gives you a discount on the price of the other yeses that you still hold.
That's
true. Or if you sell enough of them, you get free riders.
And it was right out of the gate when he stood like a deer in the headlights to Warren's attack and didn't respond. And then there were questions asked about him, which he didn't even respond to. Didn't even raise his hand and get into the conversation. Those shares started dropping so quickly. I just had to watch that investment, shift away.
It happens fast. It certainly does. And then if you get the yellow box and you can't trade at all, then you're really screwed.
So time of possession or speaking time was not, I remember it worked back in 2017. The Philadelphia Eagles won the Super Bowl and they were the team with the most time of possession, but it doesn't work in prediction markets. So that much is clear.
Well, it helps if you have a running game.
Yeah.
which in a prediction market means buy those no's.
Well, speaking of the running game, it was kind of rough and tumble last night. Let's listen to Bernie and Bloomberg going at it.
I believe in democratic socialism working people, not billionaires.
What a wonderful country we have. The best-known socialist in the country happens to be a millionaire with 3 houses. What I miss here?
Well, you'll miss that I work in Washington, House 1.
That's the first problem.
Live in Burlington, House 2.
That's good.
And like thousands of other Vermonters, I do have a summer camp. Forgive me for that. Where is your home? Which tax haven do you have your home?
New York City, thank you very much. And I pay
also
all my
home.
taxes. And I'm happy to do it because I get something for it.
So obviously this had to be the moment that that Trump enjoyed most, I would think.
Well, I don't know. Yeah, probably.
Yeah, probably. Right. I would think so.
I don't like trying to get into Trump's head. I don't even follow his tweets anymore.
Well,
I just can't.
I figure we have plenty of time to get to him. I mean, that will keep us busy once we get through these Democratic primaries. Right now, it's the Democrats in the spotlight.
Listen, my best advice to anybody is if there's something that makes you mad, avoid it when you're gambling. Don't gamble angry. You're just going to blow money.
Well, that's the good news, that there's so much to do with the Democratic primaries right now, particularly with Super Tuesday coming up. But looking at the latest polls come in, I'd like to get your insight on this. The Emerson College poll of Democratic primary voters came in. It has Sanders on top at 29%. It still has Biden up there at 22%, and Bloomberg in third at 14%. That's 3 days old. That's before the debate. Warren came in fourth at 12%. What this all leads to is the ongoing conjecture about a brokered convention, which, of course, is one of the markets on Predicted. What's your take on that?
Oh, that's a good question. At the moment, I think if the moderates keep splitting their lane, Bernie gets just enough to squeak by, but it's going to be really close. If Bloomberg crashes and Biden or Pete or even Klobuchar can somehow consolidate the moderate lane, they might have a chance to beat him. But if they keep splitting the vote, this is Bernie's. There's really no way around it.
Well, the question of the brokered convention, which obviously you have to be trusting the polls that you're using to evaluate that. Currently, that's sitting on Predicted at it's very close to 50-50. It's a binary vote, either yes or no. Will there be a brokered convention? It's just,
single contract. Yeah.
It's interesting how they came about. So in February, the primaries and caucuses that we're going through right now will only account for 6% of the total delegates, and more than 50% of the delegates will come from the March contest, predominantly Super Tuesday. And the new rule that came as a result predominantly of Bernie Sanders lobbying last year or last election cycle was that delegates going forward would be not awarded on an absolute, total basis, but a fractional basis. And it does really open up that opportunity for a brokered convention, that there won't be enough on the first ballot, and there won't be a majority among any candidate to take the nomination. I think one of the very first analysts that started signaling this probability was actually Karl Rove. Started speaking to this very, very early. And he noted that there were, right now there's 8 candidates. There were 6 in 2008. There were only 2 in 2016. Currently, no candidates claiming 1/3 of the vote. And there's actually a real probability of a brokered convention. Is that a market you're in right now?
I'm lightly yes on that. A word of caution, though. Karl Rove, but even before Karl Rove started talking about this, we were asking for a market for it. But that was when there were a lot of candidates. And as we wean down, hopefully some people will drop out before Super Tuesday, and the possibility of that will go down. I would be really happy to lose a little bit of money in that market, because now then on the other hand, as a gambler, there are possibilities from a brokered convention that just boggle the mind. That we could have so many fun markets if it actually did get brokered. So there's part of me that, as a Democrat, I wish they would solve this. And as a gambler, I'm like, well, maybe they shouldn't solve this. Maybe we could make a lot of money on this down the road.
Well, what I find most interesting is that as the candidates start peeling off one by one, and that the candidate count goes lower, the market for a brokered convention has been trending higher. It's over the last 30 days, it's moved from 32% now to 54%, looking at the current quote.
Right.
So that's counterintuitive.
Yeah, that market does seem a little confused. And I think people just really aren't sure yet. And sometimes you just need more information. And there's a market for whether Biden will drop out before Super Tuesday. That's an interesting market, too, because if he does not do well in South Carolina, he's in real trouble. So it's possible that if he came in 4th or 5th in Nevada and then 4th or 5th in South Carolina, which I really don't see happening, but if it did happen, he might drop out before Super Tuesday. That would change everything.
The latest price on that is 17 cents. So
it's not real possible, but it's something to watch. If he does very poorly in Nevada, that at 17 cents could be a plus EV bet there. So.
Well, Scott, we're going to be right back with you in a little bit. I understand you're going to share a list of more or less do's and don'ts in the tactics section, so we'll be right back. Okay, welcome back. It's Jeff Joseph and Mike Reddy here, and we have Scott, our super trader, back on with us, who's going to share some of his trading tactics with us. And, of course, all of you should be following Scott Supak at @SSupak on Twitter, because he's active and trading, sharing his thoughts on the market as they develop in real time. So follow him at @SSupak on Twitter. Scott, take us to school today. You have a number of trading tactics that you want to share with us.
I have things that you should be aware of because they're things people use to take your money. So number one is pumps. Pumps is what it's all about most of the time.
Well, where are these pumps occurring for the most part? Is this on the chat
in
boards?
the comment section? Yeah, in the comment section of each market, you'll see a lot of pumping. There's also guys with pretty good followings on Twitter. One we call him RJ, he's known as Rainbow Jeremy. He's a former bond trader, pretty sharp guy, moves a lot of volume. He is a pumper. You got to be aware of people. Sometimes they don't mean what they're saying. They're just trying to get a price that they want, and then once they get that price, the pump is over and everything falls back where it was.
Well, you can certainly separate opinion pumps. How do you identify pumps in more specific markets where there might be some inside information?
There's a lot of people you have to know. There's a lot of players. So it's like a big poker table, and you really need to know the characters that you're playing against. They have tells. For a long time, when I started in polling markets, especially, which are susceptible to pumps, I spent a long time taking notes on people. I would watch what they said in the comments. I would follow them on Twitter. I just lurked. I never said a word. And I would keep prodigious notes on who's saying things that they mean, who's saying things that they don't mean, where you find out later they were just lying to get a better price. There are very cryptic players like DMP, Derek Phillips, a great player, one of the best players around. His ROI isn't as high as mine, but that's because he's using much larger sums of money than I do. So there are guys, and he'll say things you really don't have a clue what he's saying. So I built what I call a DMP decoder ring, so that when I see him comment, I can run his comment through my decoder ring and try to figure out what he's saying. So it takes a lot of homework. It takes a lot of research, and you just need to know the other people at the table that are trying to take your money. So, after a while, you get a feel for it.
But Scott, so how can people get away with continuously pumping these markets when eventually they got to build a reputation as people who are just pumping for quick cash and then go?
Right. Those kind of pumpers are the flash pumpers. They come and go quickly. They depend on new fish. The only way they can keep making that work is if there's new people coming into the site all the time that don't know who they are and fall for the pump. The best pumpers are the ones who mix in the good stuff and the false stuff. So you're not really sure what it is they're doing. Some people will use, one of my other points was misleading information. It'll be good information, but it might not necessarily be the information that you need to make a decision about that market. So it's like a red herring. They'll kind of put it up in your face and make you think about other things and confuse you. Those pumpers are really good at what they do. And that I still to this day sometimes get pumped. So you have to be careful. You have to know who you're dealing with most of all.
In the capital markets, the pump and dump scamsters are often referred to as the noise, and you spend your time separating between signal and noise. Isn't an easy solution just to ignore the information on the chat boards, or do you find them to be net positive, the value of information you receive there?
It's a net positive once you learn to weed it. So you look for the key people, look for people people that you've trusted, and if they have something to say, take note. Otherwise, just ignore the noise.
Okay. Well, so that's pumps. So we're done. We're done speaking about Tammy Duckworth. What else do you have for
us? One of the ones that I didn't have a name for recently, and I asked my friends to come up with a name for it. So my friend Matt came up with the name Stack and Jack. This is where you get in a bidding war with someone. You want something at 5 cents, they go to 6 cents. You put in at 7, they go to 8, and they jack you up. They stack you up, and you keep going higher and higher. And then the next thing you know, all those bids that are in there between your bids disappear, and boom, 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 they buy everything you just left up there. So that's a stack and jack. You got to be real careful when you get in a bidding war. Don't ever go any higher than you want to pay.
And when you're looking at the underlying market, and of course, anybody on Predict It know, you can just click on the market constituent. So if you're in a market and let's say it's Bernie and you want to trade Bernie either in yes or no, and you click again on him, you see what the underlying market is in terms of buy and sell orders that are.
We call it the order book.
The order book. That's right. So what do you look for then in the order book that might prevent you from being a victim of stack and jack?
Well, the bidding war keeps going. If you started at 5 cents and the next thing you know you're at 15 or 20, you've gone a long way there to outbid this fellow. So you really want the thing you're bidding on, or you're getting stack and jacked. And usually I actually pull the stack and jack on people. I do it sometimes when I'm about to switch from yeses to nos, for example, and I want to sell my nose up at a high price. I build a floor of demand that's really not going to be there very long. I take a small risk that somebody's going to sell me a bunch of cheap shares, but it looks like there's a lot of demand for that contract, and I'll put my shares up for sale. And then as soon as they sell, I'll pull all my yes orders and flip back around and buy no's. So watch for as people are bid warring you, as you're raising your bid to get those yeses, watch for things coming down where people are selling yeses or where they're buying no's up above you. And if that's coming down to meet you, and there's as much volume going in against you as is going in for you, you could be in trouble. Somebody's coming after those shares that you're putting up too high as you get stacked up.
Stack and jack. What else do you have for us?
It's a great name.
It is.
It
sounds like a breakfast item at Denny's, but
it does. I'll tell Matt you said that. Head fakes are the other kind of all of these kind of things work together. Pumps, stack and jacks. People sometimes employ them in multiple at the same time, multiple things at the same time. Head fakes is one of the things you'll see where you'll see a lot of demand coming for a certain position. But the way to tell a bad head fake is to look at the other contracts. And if they're not changing in relation to it, so if one price is going up, another price should be going down. All the other prices should be going down. And if you don't see volume corresponding to that thesis, then you're probably getting head faked. Really good head fakers will go in there and build fake walls in all the contracts, so it'll look like there's volume coming. Now, a fake wall just means there's a bug in the predicted system that allows you to put up bids for more than the limit would be. So if all of your bids were filled, you would be over the limit, but it lets you do it. Now, the system goes through every morning and erases those. This is one of the least known facts on Predicted, and I saw Jipkin, who I hear you're having next week, talking about this week. It was very interesting. We thought that somebody was putting up fake walls for Bloomberg. Every morning they would come in and build them back up. There's no way to get rid of those unless you try to buy them, and then they just disappear on you. So you got to be real careful about those fake walls, and people will use those fake walls to create head fakes to make you think a lot of volume is going in a direction that it's not.
So pumps, stack and jacks, head fakes, fake walls, misleading info. How do you sort of remedy these problems that a lot of traders are running into? Are there any antidotes to these?
Well, as Jeff was saying earlier, first of all, ignore the noise, or at least just learn who to listen to. And the other would be just strict limits on how much risk you're willing to handle. Always hedge. Always manage your bankroll so that you're not too heavy in one market or another. I try to kind of stay evenly distributed among markets so that my risk is as spread out as possible. And that's there's not a lot you can do. I mean, it's tough. It's a tough world. I can imagine that trading stocks is very much the same.
Well, I would also suggest that listeners who are new to prediction market trading, new to Predicted, new to the political trade, go back and listen to episode 1 where you really shared a fundamental strategy in the tactics section that has allowed both Mike and I to have every week since this year to be a consistent, profitable week. And it's the basic strategy of buying no's. So if you have some of the basics down, you can certainly be in a position to avoid some of these dupes that are sitting out there, if you're not aware. Right.
On that point, Scott, I actually used that tactic for the first time, and it was exactly like you said. It made no sense to me going in, but once I actually did it, I understood a lot more about how it works. It's just a matter of going in there, trying it, seeing how it works, and then using that moving forward.
Learn by doing. Learn by doing.
Exactly. It worked for us.
Well, once again, that strategy is detailed. You shared it with us in episode 1, negative risk and buying no's, and we certainly suggest new listeners listen in. Well, Scott, we're going to be back with my favorite part of the show each time is when you actually share your 3 best trading ideas. We'll be right back in a moment.
Want a little more luck in your life? Get Luckbox, the control freak's guide to life, money, and probability. Named the best new magazine of 2019. Luckbox is a must-read for side hustlers, gamblers, entrepreneurs, and active investors. Each issue features best bets from prediction market experts, as well as timely sports wagering, stocks, options, futures, and cryptocurrency trading ideas. You can buy Luckbox on newsstands, but with this special offer, listeners of The Political Trade can receive a 10-issue digital subscription absolutely free. Just visit getluckbox.com to receive the award-winning magazine right in your inbox. Don't rely on luck. Get Luckbox for free today. Learn more at getluckbox.com.
Okay, we're back. And in each episode, we ask our expert trader for actionable advice on specific markets. Of course, it's Scott Supak today. And Scott, what's your favorite trade right now?
Second place Nevada is going to be a Wild West show. It's just nobody has a clue what's going to happen in there. And I love markets like that.
Let's set the stage. Nevada in first place right now is Sanders at 87, Buttigieg at 8, and Biden at 7. Basically, all polls are giving Sanders a huge edge. So that's assumed to be the winner of the upcoming primary.
Well, I think it is important to mention, though, that in Nevada, it's actually a caucus, right? And
it's a caucus,
we,
right.
we can look to Iowa and see that Sanders was expected to do a lot better in Iowa than he actually did, right? Pete sort of picked up a lot more momentum there than anyone gave him credit for.
I think that's certainly true. There's a recent poll, the Data for Progress poll that came out February 17th. It has Sanders at 35%, which is 19% over Warren, who's at 16%. So it does look, even though, we've certainly learned from the caucus that there's some uncertainty out there, but it does look like Sanders is walking away with first. So let's move over to the second place market, which has Biden in first place at 38, Buttigieg at 32, Warren at 19, Sanders at 11. How are you handicapping this?
I'm not. I'm kind of just riding it out and seeing what happens and taking advantage of the market itself. So there were earlier, now that's tightened up quite a bit, but earlier, whenever there's doubt about an outcome, you'll see big spreads, big gaps between the bid and the ask. And you'll see people moving things in and moving things out really quickly when it gets really busy too. So you have to be really careful in these markets. And my advice on them is to, rather than to just try to pick a winner and be a gambler, be an investor and find those gaps, get in there in the trading range, get yourself some no's. Once you buy some cheap, put some of them up for sale and provide liquidity to the market. And just churning shares inside of contracts can be very profitable. Be sure to ask Jipkin about that or Jason when you have him on next week. There's so much money to be made by providing liquidity to people that just doesn't get taken. That opportunity isn't taken enough. And because you're constantly selling, you're not going to hit the limits. You don't have to hold. Your risk is gone as soon as you've made a little bit of profit. So it's a underused strategy, and that's a real shame. So in this case of the Nevada 2, I'm buying no's on Biden and Pete and selling them for more if I can, as soon as I can. And then I'm collecting them slowly. And I get to a point where I have very little risk, and I can use the risk that the profits that I've earned to take a small chance on Warren. I think that after a good debate performance last night, at the very least, she's up 8 in that market today. Biden's down 1. I've sold a good chunk of shares that I got cheaper for Warren, and I'm holding on to a few as a free ride just to see what happens.
Is that where you see the volatility among Biden and Warren for the most part? So, for example, are Buttigieg and Klobuchar, in fact, they went at it. Let's take a listen, but I'll come back with a question.
You're literally in part of the committee that's overseeing these things, and we're not able to speak to literally the first thing about the politics of the country to ourselves.
Are you trying to say that I'm dumb, or are you mocking me here, Pete?
Well, I'm funny how? I mean, funny like I'm a clown, I amuse you? I make you laugh? I'm here to fucking amuse you? What do you mean funny? Funny how? How am I funny?
That's terrific.
Well, did you find that funny? I mean, is there any life or fight left in Klobuchar and Buttigieg?
I found it funny because it's just, I don't understand why the moderates were going at each other so hard. It doesn't make any sense at all. And if anything, I think that hurt Pete a little bit. I kind of favor Biden for second place, although he's really just falling apart in the polls. But so I think there's so much doubt in this market that and they're also grouped so tightly for second in Nevada, that this market is just going to be a huge money-making opportunity on the night of. The problem is if the site can handle the traffic.
All right, so that's trade number one, the Wild Wild West in Nevada, and you want to move back to the Midwest, right, for your second trade?
The slow motion market that just rules.
How about it?
Is Iowa.
The gift that keeps on giving.
It's just amazing. It reminds me of some of the best. We had a famous market in 2016 for Secretary of State, and it wound up resolving Shannon because he was the acting Secretary of State. It's kind of famous market, and this one is a contending for best market ever now.
Well, set this up for us, Scott. Your second trade is Iowa, which was a couple of weeks ago, but still unresolved. Can you give us the backstory and what the opportunity is today?
Well, I'm not. I can't get into the weeds because I don't know all the details. But Pete is ahead, and I thought Pete was still good value even at around 75 cents, which I was buying. And then they took a delegate away from him and didn't give it to Sanders, which cut Pete's lead way down, and the market corrected below. It flipped for a while. Bernie was ahead. Pete's back up now, but I still think Pete is good value in there. I had to wash some shares and take a small loss. And turn it around, but I still think that Pete's ahead, and the satellite issue and all the other things. And once you count it all up, I just don't see how Bernie pulls it out.
Well, so Pete is trading today at 56 cents. It's almost an even money opportunity for a caucus that was held a couple of weeks ago.
I think he went all the way down to 45 at one point during the correction. So, yeah, it's a crazy market, that's for sure.
Do we have any idea when this will ultimately resolve?
It could be a long time.
Associated Press reported on Tuesday that Sanders' campaign plans to ask for a partial recount of the Iowa caucus results. So that's going to drag this on.
It'll probably go past Super Tuesday, believe it or not. Now, here's another opportunity. Excuse me. There's at the moment not great gaps, but people are tired of this market. I mean, honestly, physically tired from being in this market for so long. And so I think a lot of people are just disgusted with it and trying to get out, which also creates interesting opportunities. If you think it's a positive EV at 54 cents, buy it at 54 and then just watch. And as things evaporate occasionally, the price will jump, and then everybody sees the price jump because they have marker shares in there, sending them alerts, and they'll run back in and fill it back in with volume again. So if you're a patient person and you have a schedule and you can come back like I do every 5-10 minutes and check it, you can buy at 54 and sell at 57 all day long.
This is a highly traded market. Almost 25 million shares have traded since inception in the Iowa market. Huge. So you're right. There's a lot of tired traders out there in Iowa, but
including me.
Still opportunity until this is resolved. So basically trading the swings. And but what do you think is an attractive low price to get Pete at? Would you take the current 56 and try to pick up a nickel, or would you like to get him a little bit lower?
I'm buying. I have orders in at 52, 54. Every time it dips, I try to buy on the dips and then sell on the peaks. And then I keep a little bit of each time. So I'm slowly building a collection of yeses back again.
Another strategy you shared with us previously, right? Okay. Well, all right. So that's in the Midwest. You have us in Iowa. That market's still open for opportunity. And moving on to your third trade, what do you have for us, Scott?
The 538 Trump approval rating market. There is no better indicator of whether a president will be reelected than his approval rating. And he is up right now. He's been on a little tear, the post-impeachment acquittal bump. with a little bump from the State of the Union. I see a lot of people out there that think it's the economy, but there's been some very good political research lately that suggests that economic concerns have split because of negative partisanship. So it's just not I've got the links up to it on my Twitter if anybody wants to go look at the details. But the bottom line is that ever since Reagan, we started to see Reagan people still, his approval went up and down with the economy. But as we got into Papa Bush and then even Clinton, we started to see that separate out a little bit. By the time we got to Bush 2 and Obama, it was almost completely separated. And now they think it really has completely separated. Partisans don't care what's happening to the economy. If you're a Democrat, you're going to vote Democrat. If you're a Republican, you're going to vote Republican. And that's really all there is to it.
Well, let's back this up a little bit. I want to be certain it's clear for our listeners. So once again, the market you're referring to is the 538 Trump approval rating market. Tell us about those markets in general and what they look like.
Well, polling markets, the first rule I would say is read Jason Pipkin's guides. He wrote some great guides on how to play polling markets. If you're going to play polling markets, don't do it without reading those. I cannot stress that enough. There's a lot of basic strategies. There's a lot to know. You really need to know polling schedules is extremely important so you know what's coming. And in the short-term markets, which we have now, the 1 week markets, excuse me, that really is the key to everything. You have to know what's coming and what's going to make the average move. And you need to know a little bit about how 538 calculates their average so that you can predict what a poll is going to do to the average.
So when you look at a 538 approval market, you'll see 5 to 7 or 8 different bands, narrow bands.
Brackets, we call them.
Brackets that offer maybe about half of a percentage point variance among them. So whether the job approval will come in at 44% or 44.4% or 44.8%. Mm-hmm. Mm-hmm. Those are very narrow, and there's so many options. How do you make a calculated investment in those markets?
By the tranche, which is by a range of contracts. So at the moment, I have bids in 1, 2, and 3 for yeses, and I have bids for no's in 5, 6, 7, and 8. I haven't touched B4. We call it B1, B2 for bracket 1, bracket 2. Mm-hmm. So I haven't touched B4 yet, which would actually be kind of where he is right now. So if you think he's going to go down, then buy the B1 through 3 brackets as cheaply as you can for each one, and you've bought a tranche. If you can get them for 20 cents each, then you bought the 43.4 to 44.2 range for 60 cents if you got them each for 20 cents. So you buy a tranche, and then you can hold until it gets closer to the resolve, and you'll know more about which of those you're going to wind up in, and you can sell the ones that you don't need and increase your profit that way.
Well, this is such a hot market right now. Just within the last 4 or 5 hours, The Economist put up a story on their website about the Trump approval market, and basically saying that they referred to a bogus bump, and I use their term in quotes. And they basically made the reference that pollsters use statistical procedure called weighting, which is basically to adjust the findings to meet a certain target demographic, right? Are we properly balancing the demographic? Is it representative in a good balance of minorities and working class whites and other considerations? And that their contention is that as Republicans have become more likely to take part in the surveys in the past few months as a result of the impeachment acquittal and an upbeat State of the Union address, that contributes to a partisan bias of the polling constituents, which then distorts the results. So they acknowledge that Gallup poll has Trump's approval at 49%, which is the highest it's been ever.
Since last month, or since 2 weeks ago.
Well, yeah, but that's also ever. It's actually up 5 points from an early January poll conducted before impeachment, and then the NBC News Wall Street Journal poll also has him at 47%, which is the highest number since June of 2017. So his numbers are definitely upticked, and what you just made reference to seems to be the question. Is there such a partisan divide that the economy, which would typically bolster any incumbents' ratings given the strong economy. Has there been a decorrelation, a decoupling between the economy and job approval, particularly with a divisive figure such as Trump? And your contention then is yes.
Yes, there's been studies on this. There was a time series from 81 to 2015, and they just found that as time went on, there was the economic assessments became untethered from presidential approval ratings.
Well, looks like you've got a step ahead of us, but we're going to be watching the middle tranche closely in the 538 poll and looking for a regression back to the mean from this uptick that the president's enjoyed over the last couple of months.
It would be B1, by the way, if he really regresses fast. The thing is that the polls that just came in were good for him.
They were.
He had Emerson. Well, they're good. They're always good for him. They're high. Emerson, which I mentioned we had problems with earlier, was high. Zogby came in high. So there's a bunch of things that came in that were good for him. Now we're staring down the barrel of some things that are bad for him. We have ARG coming tomorrow. AP will probably be coming out. Those are traditionally lower polls for him. So I would think that now that I've said it, of course, I won't be able to get cheap shares, but that market is probably headed down. I think his approval rating is going to head down this week.
So the approval markets is something that experienced traders and new traders should take a look at. And remember, I want to remind listeners that being a listener on the political trade, you have the ability to make a very quick $20 on your very, very first trade over at predictit.org. If you're opening up a new account and you go use the promo code predictit.org/promo/TPT20, that's predictit.org/promo/TPT20, we'll match the first $20 in your investment. Actually, that comes from Predictit. And your $20 invested becomes $40, and you're in a position to start trading. So take advantage of that special offer. We're going to be right back with Scott after one more quick break. He's going to share his Luckbox of the week with us before we wrap things up. Welcome back. We're going to ask Scott before we close out each show for his Luckbox of the week. A Luckbox, as you know, is somebody who's the undeserving recipient of an outlier outcome, a favorable one. And gamblers know that term. It's also the name of our magazine, Luckbox Magazine, which focuses on life, money, and probabilities. And each issue, we share a Luckbox of the month, and we're going to do that right now by asking Scott, who was the Luckbox in prediction market tradings this past week?
All those Bernie yes holders in Iowa that got my money.
They got it, and they still have a chance. And they still have a chance to take it, right? Because that market's unresolved, right?
They do, yes.
It's true.
There was a delegate taken away from Pete and narrowed the lead, and the market had a massive recorrection, which allowed a bunch of lucky Bernie bros to get out. They have a nice exit point if they want out now.
Right, and for new traders on Predictit, generally speaking, how promptly does a market resolve itself? So, for example, last night we saw the debate markets, right? The prop bet markets for the debate. How once the outcome is posted, how quickly do the markets resolve? How quickly do they pay out typically?
That's pretty fast for your weekly polling markets, like the 538 market. It technically closes at midnight, so they'll suspend trading. But in the morning they will pay it out. So it's usually the next day, sometimes even faster.
And of course, in this case, Iowa, the caucus was a couple weeks ago, and you've identified this as a trading opportunity still in our trades discussion earlier. So I get it. Yes, there's certainly a lot of luck boxes who should have been losers in that market who have an opportunity to get out.
Yep, they sure do. And they got some of my money, which is always lucky.
Well,
nobody takes my money because they're good. They only get it because they're lucky.
Well, we look forward to having you back again, Scott. Thank you again so much.
Remember
to follow Scott over at Supak on Twitter, and tune in next week. It'll be post the next debate, which is Tuesday, February 25th in Charleston, South Carolina. We're gonna drop the next episode the day following that on Wednesday, which will give you plenty of time to listen to our trade recommendations from Jason Pipkin for the upcoming South Carolina primary, which is that Saturday. So next week, joined by neuroscientist and another prediction market super trader, Jason Pipkin. This is Jeff Joseph.
And I'm Mike Reddy.
Join us next week on The Political Trade.